Hello, fellow traders. 'Tis I, the rumpled one. I have to laugh because I guess the rumpled one is a brand and Drain the Banks is a brand. And if I put these charts up or these post these videos on certain platforms, it's considered promotion. I mean, this is all about trading. It's not about promotion. I just find it hilarious. Anyway, it is Tuesday, May the 21st. The year's 2019. Let's talk trading. What's on your chart? I hope somewhere, maybe not on your chart, maybe it's on your desk, but you do have your money and risk management. Maybe you have it on a post-it note to remind you. Maybe you watch these videos to remind you. But I just hope it's part of your daily trading session. So let's see what's on my chart here. Well, look at this. We've got the euro yen got into the upper weekly wick zone there from the previous week. We've pulled back out by about 4 pips, 5 pips there. As you can see, we've got some gaps that have filled. We still have a few open gaps. It's Tuesday, so still plenty of time during the week. Maybe get those gaps filled, taking advantage of a statistical trade. The day and week, you can see it's up. We actually opened just below the previous day's midpoint, went south, and then it crossed and crossed hard. Once again, you can see breaking out of the previous day's high. And also breaking out of the previous day's highs right here again, showing the opening range. And if you notice, that's almost a doji there, pretty much a doji if you're into the candlesticks. But we're still below the opening range of the first day of the year and the opening range of the first day of the month. You see you have a lot of room to make up there. But remember, see, there's the close, there's the open, there's that huge open gap that has not filled. It just might fill sometime in the future. Still below all the opening days of the last 12 months. See that one ball on the top of the daily. And we're still outside all of the ranges for the last 12 months. Okay, why did that happen? Inside bar traders, we've been looking at this now for what, over a month or so when I added this chart. And you can see here we had that inside bar 3 days ago, broke out yesterday, but pulled back in, and now we're having another breakout. Right now it's up by 31 pips. So I think there's at least one trader out there that would really like the inside bars, and obviously they are profiting from that trade. And here showing the range, only 70 pips. We've got 4 over 100. So once again, volatility is pretty low, but you can see here we've got a nice 70 pip range on the euro yen today, and you can see that movement reflected. We just had a holo trade trigger here. You're up about, 7 pips. If you took that short, once again, you can see that we made a new high. We moved up, not high, came back out of that wick zone there of the previous candle, which right there is the holo zone. And so to the south. And I'm actually looking to see price come all the way back down and out of this momentum, because price pushed up here, there's got to be some more buyers here, and those orders need to be filled, but it might not happen. And here's the lowest of the day. You can see here lower lows, higher low, and the reversal. And this is something that we see happen every day. And I just like these methods that work every day, not worrying about market conditions or trending or support resistance or, any of that other conceptual stuff. Just simple highs and lows and watching what price does. You can see the pivot point today was right near the open, so no bias. So just taking the buy zone trades, it paid off there. Taking the trade here out of the sell zone, paid off. And once again, the buy zone paid off huge. Simple horizontal lines. Rats right here, red rats, are looking to feast. Any entry here is a valid entry if you're doing a rat zone trade. And we took out the pivot. And you can see there was really hardly any separation between the wick zones. So price, was pretty much was inside the wick zone, but it left it. Even when most of the previous day's candle was wick zones, you can still see price left the wick zone. Trading at lines, here's yesterday's open, yesterday's high, here's the previous week's open line. So once again, you can see how these levels, how price reacts at these levels. At the tick level, you can see we're just having about a 3-pip waiver here. Nothing spectacular. From when I brought up this portfolio, you can see there was a long trigger that didn't pay out. Make up the difference on the short. Larry live trade, Randy real time right here. Looks like long is the answer. Well, I'm not quite ready to end the video. Let's see, got to get these charts to scroll over. And I made a chart. I had an idea since we've been talking about highs and lows a couple weeks ago. And then I said, what's on your chart? Yesterday was pretty much a blank chart. But what I did was I was thinking about the highs and lows. So I loaded up a whole bunch of HL5s. And what I did was for M1, I have the previous two highs and lows. For M5, M15, and then H1, and then daily, weekly, monthly. And I was just looking at price action around these highs and lows. And we can just sit here and watch the chart and tell me what you see. But you can see here we use these M15 highs here, but we're only on the 1-minute chart. But you can see what price did. And you can see here how price cut back through that previous 15-minute high, basically exiting a wick zone or entering a wick zone here. And see, here's M1, 1 bar ago, M2. So does price pass through this area or does it reverse off of it? But it just gives you another clue on price action and possibly when to take profit. So you can use it for entry, you can use it for exit. And these dots are just the previous candle. Midpoint, once again, giving you a directional bias. I mean, somebody's going, well, how exactly would you trade this? Well, what I'm looking for is price crossing lines. So right here at the bottom, you can see it put in this low. Well, actually, let's just take here. You see right here, price was hitting the low, open below, and it just had a big push down. Now it just jumped back up. When I say big push, we're only talking a couple of pips here. I mean, you have to look at the scale to get an idea. So you're saying, well, wait a minute, it pushed down to here, didn't quite get through the M5 low, and all of a sudden it reversed up through that high. And see here, it's going right back through those highs. So what I was going to talk about here is you see it didn't make a new low and it reversed. So here it made it. It didn't make a new M5 low. It went through the M1 lows and then boom, reversal. And so you can see, because we're doing just the previous two, so a lot of times things will shift on the chart. Since we had top of the hour here, of course everything just shifted. So you can see here top of the hour, and we'll see what happens. And for those of you interested how to set this up, once again, the TRO HL5 indicator. And the only thing what you have to do is, for every time you have an instance, you have to increase that by 1. So this is 0, the next one's 1, or you can increase it by 10. It doesn't matter. It just has to be different. So the objects have different names. And so here I set the period to 1 minute, 2 bars, shifting back 1. And so I did it for the 1, the 5, the 15, the hour, the daily, weekly, monthly. So we're always looking at just the previous two. So you can see here, we open below that midpoint, and what's going to happen next? Will it cross through it, or will it come back down? Will it break out through these highs? And you can see the H1 and H2 high right here, or H1 high, 1 bar ago, 2 bar ago. And so you can see that they're not too far apart. So some people might consider that a double top. And you can switch to the different time frames, but you still have the plots. So you can see here, once again, just looking at this chart, right there, you can see the previous wicks, this big candle down. You see how price covered this big candle down, and the price just now covered this big candle down. Price just covered this big candle up. And that's one of the things I'm looking for in looking for entries here. And it switched over to Euro CHF. Let's go back here to the Euro Yen. And you can see the price action on the 1 hour. There's the previous midpoint, and price went through it, came back, reversed up through it. You can see how on this chart, and I just put it back to M1 so you can see these highs and lows a little more clearly and how you might use it to take a trade. So you're basically just looking for price to react at, previous highs and lows, and does it break through or does it reverse? Just remember, fellow traders, It's not what you trade, it's how you trade it. Drain the banks.